right, guys. Happy Sunday. This is my trade journal review of the week. I like to do this when I do a really bad trade something happens. I like to review it, or if something great happens, I like to review that too. I'm always learning. So this is a trade journal review, mostly for me, but I do like to share these because over time, some people find it really helpful. I know I do, just to review what I did right in addition to what I did wrong. So in this case, this is the screen from the video from last week, last Sunday's Open. If you didn't see that or you're curious, it's a 9-minute video, and I'll post a link to it in the description of this video that you're watching right now. If you want to go back and review. So I'm not going to get too much into the setup, but what we were looking for is price to come down here into this general region where there's a confluence of fibs right here. A equals C is down here. There's 786 down here, and there's a 2618 down here. If this was going to be a B, C, then this general area is what we were thinking and looking for to get long. We weren't trading short. We were looking for a long setup based on this structure, looking like it would be complete if it could come down into this area. Then it could get long. Then we could get long. This all based on Elliott wave. So that's what happened, right? Here I'm going to hit play now. I rewound the tape to last Sunday night. So here's overnight it's coming down. This is a 144-minute chart. So once it came down, it actually exceeded that level by $1. I think it's worth noting price loves to exceed these levels and push people to their limit. It did it over here too. We thought this was a meaningful bottom and it exceeded it. But what the clue is what kind of a reaction does price have to what you think might be an important level? If it has a reaction like this, then you may be right that this was an important level. So it's better to wait. You try to pick the bottom. That's not. I used to do that a lot more often. I don't do that anywhere near as much as I used to. I wait now and just watch for the reaction. So in this case, we had a fantastic reaction. So then I start looking at the microstructure of that, thinking, is it going to give us an impulse? I'm sorry, my kid is screaming in the other room. So it did give us 5 up. This played pinball well, so I'm not going to get long. It's too late to get long there. So now I'm like, if it comes back to something like a reasonable fib, which a reasonable fib would be a 618, especially if it has a reaction to the 618. So look at that. This is a 144-minute chart, so you can't see the details, but it came down almost to the penny to the 618 and then had a reaction. So by the time I paid attention to that, it was Tuesday morning. I didn't pay attention to it till it was over here, like 6 in the morning, 7 in the morning. But to me, this is fantastic. This is playing out to our plan. It came back. You get 5 up. You get a pullback to the 618 and a reaction. I know this is a very small reaction, but it's a reaction nonetheless. So now I'm like, I want to get long. And had I been watching, I would have used this 15-minute strat to take an entry, but I wasn't on screen at that time. So as soon as I saw an inside candle, it started coming back. And at this time, I'm getting kids dressed, trying to make breakfast and deal with stuff, get ready for the day. And I just put an order at the top of that candle with a stop at the bottom of that candle. But then as I got triggered, because it did get triggered, I thought, this needs to come back. It's probably going to come back. I don't want to get stopped out while I'm not on screen. I'm going to take more risk. So I kept my position smaller than I would have liked to had I been on screen and been able to be on screen. Because if I'm going to go with size, I'll keep a tight stop and I'll try 2 or 3. There's been times where I've tried 4 times, 5 times even. The most was 5. The most successful trade I had, I got stopped out 4 or 5 times with tiny gains, tiny losses. So in this case, my position was smaller because I can't be on screen, and I used a wider stop just to trade management. Now we're talking trade management. So I'm in the trade. It's working great. Trade management is now like, where does the stop go? So as it come up, you put a fib support pivot zone on here based on this 1-2. So I don't want to move up my stop yet because it's very likely going to come back into this pivot, or at least test it somewhere in here. So I don't even want to move my stop up. Now my stop is at break even at 99.02 entry, and I still don't move up my stop because I'm not convinced. So, and I'm also not on screen. So I'm just kind of observing. But the second time it came back, this is just trade management stuff. The second time it came back. Now let's go back to the strat now. So now we're looking at the 1 hour strat. So as it's bouncing around in this range, I'm still not moving my stop up. But when it poked above the range here, and then it came back and held the 50% of that range and reversed again, this to me was bullish. Call it a Darvis box thing. It broke out of the top of the Darvis box. It held the 50% level of the Darvis box. It kept moving higher. So now I move my stop up to this low. So that's just trade management stuff. And then, as you know, it broke out of that range. After, it chopped in the range and then it broke out of the range. That's great. Love that kind of price action for longs. So now I can move up my stop. So now I'm moving the stop up a little bit more aggressively. So now I'm already thinking about, I need to get out of this trade. I need to take gains. And I just call it whatever you want. I don't even, I guess it's intuition or whatever, but just the strength of this, I didn't want to take it off here because I thought I was willing to risk some of this if it kept coming back down. I just didn't think it was done. So I allowed it to stay on, and my stop was still far below that. Then when it broke that, I said, okay, now I'm pressing my luck. And it came within 1 penny of the 2236. So now I'm like, I got to raise my stop and be a little bit more serious, which I was doing, putting it like there and then putting it there. And then the final straw was, boom, that's the final straw. It came up to within 1 penny of the 618. And I'm like, okay, I got to get out of this trade. So now I'm using the 15-minute strat to just raise my stop to the bottom of whatever preceding 15-minute candle I could find. And it immediately came back. I think I might have 2 periods on the 15-minute where I stayed in the trade. But then I got stopped. I actually got stopped on that candle. So boom. So we're out of the trade with $7.31. This trade was almost entirely Elliott wave. And this 1 hour chart really helped me too, because as it was consolidating in a range with a flat histogram, and it's holding the bottom of that range, it's poking out of the top, that gave me conviction to just stay in the trade with a wide stop, give it a chance to break out and go higher, and it did. And then I got a little greedy in here, but I was willing to risk just to speculate that it can go higher. But then I started moving up the stops. So, this was a great trade. So, to me, the lesson was, if you have conviction in following the fibs, don't use too tight a stop. That's personal. But, that's what I did, and it paid off. This was just an excellent trade. It was my third best crude trade. Hope this helps somebody if you're watching, and I appreciate you guys watching. I'm just sharing my stuff really for my own education, but some folks like it and find it useful, so I'm happy to share it. All right, guys, good luck. See ya.